Hello and welcome to TheoTrade. My name's Doc Severson and this is the Theo Night Report for Thursday, October 6th. So we've actually had a little bit of a hiatus lately from these big earth-shaking events like the Jackson Hole Conference and FOMC minutes and FOMC policy release and FOMC conference. We haven't had any of those for a couple of weeks now. It's been a nice, quiet 2 weeks, but unfortunately, quiet means that we're not getting any volatility, no movement, no opportunity right now, but that is going to change. Now, will tomorrow's jobs report change this at all? Well, I have my feelings that it's really not. I really don't think that it's going to do this because I really just don't think it has any bearing on whether or not the Fed's going to raise rates in December, which is apparently what everybody's wondering about right now. I think that's already such, this one has jumped the shark so long ago. I just don't think the market cares that much about rising rates, at least a small rate hike like that. Now, if we truly get into a rising rate environment, that could be a different story, but remember, the whole rally from 2003 to 2007 was conducted within a rising rate environment. Every single Fed meeting was another quarter point. So what do we have tomorrow? We have 168,000 is the consensus number. Remember, last month we had 175,000 expected, and we didn't come anywhere close to that, 151,000. So this one is even a lower bar to jump over, and it shouldn't be that much of a problem. But honestly, I just don't see the market having a huge reaction one way or another depending on what comes out. Although, let me qualify this, is that the market is currently in a position where it's just about to move in a big way. I just don't know that jobs is going to be the catalyst to cause that movement. It's going to be some piece of information which is not currently priced into the mix, which is going to cause things to move. So what does that mean? If we go over to the S&P 500 futures, this is a daily chart of the S&P 500. And what we're looking at here is this is about as textbook of a symmetrical triangle as you're going to get. A symmetrical triangle is a little bit different from a pennant. A pennant's more of something that just occurs very quickly like this and is over and done with in the space of maybe a week or two. This has been a little bit longer than that. So this is really more in the mode of a symmetrical triangle. As you can see, we're coiling into the apex here. And actually, I've had several people ask me like, hey, how come, where's all the trades lately? Well, this is why. It's just not moving. It's just not moving. So the next question is, which way is this going to go? Well, I don't know, but we could assign probabilities to it based on some of the work that Tom Bolkowski has done in terms of breakouts from symmetrical triangles like this. However, I think that what we can do is we can simply watch some of these trend lines as well as some of the price levels that we have here to understand. Once those price levels are breached, then we're more than likely going to be trending in that direction, at least for a short period of time. Now, many times the first direction of the breach ends up being the false move. We could go back to a November 2011 and find a very similar pattern to this where we consolidated in the triangle and actually fell out of the downside before seeing an equally impressive move back up to the upside through a slingshot movement. Or we could simply see something just break out to the upside and just keep on going. Or perhaps we're going to fall out to the bottom and then roll over and start to really build up the volatility. Anything could happen from this point. So I think it's important for us to be as neutral from a bias perspective as possible and really just sort of call out the levels and understand what to do. It's almost as if we have to program ourselves based on what the price does instead of the other way around. Now, when we get into conditions like this is typically where I will add something which is called volume profile. So I'm going to look for this volume profile down here and add that to that. And this really is going to show potential areas of support and resistance. And you can see how much trading has occurred right around this 2153 area, 2153 to 55. Or so. This is one of the big peaks right in this area. The next one down from here is about 2080, And from there, we start to pull down. Now, again, these levels are for the ES contract and not necessarily the true SPX. I could throw up the spiders here. We could see the spiders, so I can't do it on the SPX because there's no volume. And you can see that they're roughly equivalent. They're roughly equivalent with about a 208 peak here and another peak at 206. But we'll stick with the ES for right now. Okay, so as well as these trend lines, what we can also do is we can go down in time to say something like a 1 hour chart and start to look for levels that we find to be very, very important. So obviously one of the price levels that we have to deal with here is really the very center of this, or point of control for what's going on here, and draw that right around the 2153 level. Okay, so we'll draw that one there. So that's, we're going to give that a little bit more size to that so we can see it a little bit better, but that's one of the lines that we have to watch for here. Another line that I think that we need to watch for on the upside is going to be approximately 2168 or so here. So this line up there is going to be important. Another line below this is going to be about approximately 2143 or so. So this line is also going to be very, very important in this area, right? Because this was former resistance, became new support, but a lot of trading has occurred in this area. There's also 2129 has been important in the past. So we're going to mark this one down here, 2129. Okay. And then from there below that has been about 2112. Has been an important level as well too. So watch these levels over the next few days. I think there's a very, very good chance that we're going to be trading outside of this range, you know, outside of this sort of, you can see the trend lines in place here. That's been sort of keeping the price jammed into this apex here. And once we start to see some of these horizontal lines break, whether it's 2123 and then ultimately 2169, right to the upside, or whether we see 2153 break and go through 2143 and then 29 and then 12, we can see this breaking to the downside. You can also even put in alerts to let you know, set up alarms and let you know when certain levels are being broken so that you can be more objective about this and not, you know, it's going to happen fairly quickly when it does break. So if we don't get this to break tomorrow with a jobs report, more than likely I will be dropping to one knee, genuflecting, and praying to the gods of volatility that we do break this range here fairly soon and start to get some volatility back into this market to give us some movement. Remember, movement equals opportunity in this market. So that's it for tonight's report, folks. Thanks for listening, and stay tuned to this weekend's report as well. Thanks again. Take care.